after company, the results only confirm what he already told us. Real wealth creation needs only four things: quality, growth, longevity, and price. It's never about timing the market, but time in the market. India evolved, values migrated. We moved from factories to fintech, steel to software, markets to metaverse. But fundamentals remain unchanged. 3 decades, 1,000 plus companies researched, 30 wealth creation studies. Every study a tribute to India's wealth creators. After glorious 30 years, the next 30 years continue to hold infinite possibilities, because wealth creation only compounds. Presenting the Motilal Oswal 30th Wealth Creation Study by Ramdeo Agarwal.
This was fantastic. The 30th study truly deserves this special treatment. Like all of you, I'm also waiting to get my hands on the copy of the Wealth Creation Study this year. It's now my honor to invite the person who has shaped this 30-year legacy of research and investor education, a pioneer of equity research in India, chairman and co-founder of Motilal Oswal Financial Services, and a guiding force for all of us here at Motilal Oswal, as well as for countless investors out there, Mr. Ramdeo Agarwal. And in the meanwhile, let me also call upon the co-author of the Wealth Creation Studies, who works very, very closely with Ramdeo with full dedication in research and writing, Mr. Srinath Mithantaya. Srinath? So I just want Mr. Ramdeo to felicitate Srinath for the years of work and dedication that he's put in to create the Wealth Creation Studies. Yeah. Ramdeo, before you present to us the Wealth Creation Study, it'll be great if you can just share some, anecdotes, thoughts of your 30-year journey, with all of us, and then, we can dig into the presentation. Thank you.
Okay. Hello. Good evening, friends. It's a pleasure to be standing again in front of you. 30th Wealth Creation Study. I think it's 30 years, and this time I thought I'll invite Motilalji to also be here. Typically, so all the HODs, CEOs of the company, they're also here because I made sure that this one definitely they must not miss it. So the study started off in 96. As a, we wanted to host an event where we wanted to actually celebrate first year of corporatization of Motilal Oswal. Because Motilal Oswal till 95 was a partnership, actually not even partnership, proprietorship company. And then it became a straight corporate as per the new law. And then we said, first year of the company, let's celebrate with some kind of an event. And this is the event we thought. That's how this event was designed. By that time, I had met Buffett in 94, and hence the inspiration came from Mr. Buffett also. And then we started doing Wealth Creation Study. And this studies were inspired by Phil Fisher, Common Stock, Uncommon Profits, and all the writings which came up from Mr. Buffett. So that was a big inspiration. But eventually we realized that this is the best way to learn, enhance the knowledge of your own about the stock market, investing, and what all has happened. Because there is so much of data, so much has happened in the markets, we are not aware of it. Even this time also, when you look at data, particularly you'll see long series data starting from 1950 for the world, for the US, for India, for the sectors, for the companies. I think there will be so many, and I love data. So stock market is nothing but data, and I think a lot of stories go on, but finally the data works. So this is the study of past data rather, not so much about the future, but past only shows us the future. So with that only, we reinforced ourselves. I think Srinath started writing from 2005-6 or something like that. Then it got deepened even more. Dhruv Mehta has always been with me. I mean, he walks with me from 92 onwards, but I think he started joining the wealth creation study maybe 97, 98 after 2-3 studies, and he realized that it could be worthwhile for him also to spend some time. So that's how he started coming, and now he's more dedicated. He's an AI expert for us. Anything you say, and he will go to the AI and get some more stuff. So that's how he's our tech expert. And so we three of us, we spend most of the time. This year Vishal Katkoria also contributed. So now the team is becoming a little bigger, and I'm enjoying this wealth creation study even more. So now coming back to this year's wealth creation study, so I read a book called The New Wealthy World. So I was trying to figure out, there was a lot of money being made in the stock market, particularly in India. In last 5 years, we have gone up from about 145 lakh crores of market cap to 450, 460 lakh crore market cap. So literally 300 lakh crores, which is almost like 1 time of GDP, has been created. So what is the impact of this in the real economy? There is some impact going to be. Now what is the impact? So I wanted to study that. I said, what happens of the wealth effect? What is economists, they call it wealth effect. So is there any book on the wealth effect? So I was searching in Google, and here comes out with this Wealthy World, written in 2001 by Mr. Edmonds of Boston, Babson College, Boston. He's a financial prof, and I found this book to be completely fantastic in the sense that, what he could see in 2000 or 2001, I think I have not come across any book which had that much foresight. In fact, I was joking with some friends, I must recommend, if I can, for a Nobel Prize for this particular guy for economics. So I think he has done he has really opened. So we'll talk about it a little more, but that was the inspiration. So one of the things is, if you read Thomas Piketty book, Capital, and this book, then comes out is that what is the wealth? The very form of wealth has changed over a period of time. Way back 300-400 years back, it was land, it was palaces, it was the estate or some cattle or gold, silver, then it became gold, silver, and then rare commodities and all, and then bank balance, real estate, and then finally market cap. I mean, today, if you go and ask Elon Musk, Warren Buffett, or Bill Gates, how many acres of land they have, how many palaces they have, there's nothing. What they have? Only market cap. They have share certificates of their company. So that's how the whole wealth from physical to paper, and now it is becoming digital, completely digital. So this particular shift over last 200-300 years has happened, and it has accelerated even more so in last 50 years. And fortunately, India is right at the cusp of it, and we all are beneficiary of it. We'll talk about it. This is the story of this year's wealth creation study. So the study is in 2 parts, wealth creation findings and then the theme. So what is the concept of wealth creation? What is the concept of wealth creation? Process by which a company enhances market value of capital entrusted to it by its shareholders. So this is the biggest magical machine. This we are writing, these 2 lines we are writing for last 30 years. Little I knew that this year's studies, the heart is the securitization, which is capitalization of the companies. So this is the concept of wealth creation. Net wealth created is market cap over the study period 2020-2025, adjusted for corporate actions and dilutions. And the study this time covers the top 500 companies of 2020. So the cutoff of everything, because these are the significant companies, there is no point in including in the largest and fastest, very small companies. So we have started with the 500 companies. The amount of wealth created is about 148 lakh crores in this particular period. This is by far the largest. It has been growing. In 2001 to 6, it was just about 14 lakh crores. Now it is 148 lakh crores. And as we go forward, this number will keep growing. Then the pace of wealth creation by the top 100 companies is about 38%, whereas the index has done about 21%. This 38% means it has started from the COVID lows in 2020. In COVID lows, the markets were depressed, and that's why the percentage gain is much higher. Otherwise, it used to be about 20-25%. The largest wealth creator, the biggest wealth creator is Bharti Airtel, about 8 lakh crores. ICICI Bank, SBI, Bajaj Finance. So they have all created upwards of 5-6 lakh crores. Just to give you a significance, what really happens, in 2001, total market cap of India was 7.5 lakh crores. 2001, all the entire market was 7.5 lakh crores. Today, one company in last 5 years has created 8 lakh crores. That's a change in 25 years. And this is a change, I mean, if you just do this, in next 25 years, what is going to happen? That's what is the exciting part of it. I'm just giving the context, what it was in 2000 and what it is right now. So the size of wealth created by top 10 is about 46 lakh crores and top 100 is about 148 lakh crores. The crazy thing is, this time, Reliance, HDFC Bank, TCS and Infosys, all four are missing. Because this year, the pace of wealth creation is 22.5% compounded. So any company which has not matched up 22.5%, we have excluded from the study. So this particular study is, I mean, we have been doing this every year, but this year, these four biggies, they have not made it. So just these are the times, other companies are growing so much faster, the big ones are finding it very tough. Another thing is that top 10 companies, the share, because of this four are gone, the top 10 large caps have contributed only 31%. Earlier it used to be upwards of 40, 45, 50%. This is also telling something about what is the march of mid cap and large cap in the total wealth creation. So clearly the large cap has left behind for some time. My sense is this is going to catch up. This churn always keeps happening. This is going to happen in next 5-6 years. They will get their due share, about 40-45% of wealth creation from here. The fastest company is BSE at 124% compounded, and this has been quite staggering. Even the profit growth has been 65%. The stock was available at 12p and now it is 53p. This has been stunning right in front of us what has happened. Rail Vikas Nigam, Jindal Stainless Steel, this time for a change, these fastest growth companies are very credible companies. All of them, they are very good. And if you had all the companies in a portfolio, it would have given you 88% compound, literally doubling every year in your portfolio. Most consistent wealth creating companies, there are only 13 companies which have been able to create every year, out of 5 years, every year. And Hindustan Aeronautics comes out right at the top at about 75% compounded. Then all-round wealth creators are there. Again, there are two defense companies which have done so well because they were completely neglected in 2020. And that's why they have done very well. Wealth creation, there's a lot of upheaval about which are the businesses which have done well. Like banking and finance is standing rock solid at 24%. And earlier also it was 22.3%. So clearly, this is one segment where you have to be very careful. This will always create wealth. In fact, my sense is it is going to be bigger in next 15-20 years. We'll talk about it. And banking, finance, insurance. Now insurance is going to emerge very large and a secular compounder. And then capital market, which is which is literally negligent in this particular era. The next round, you know, today AMC, ICICI AMC has come out, Grow came up, NSE is yet to come. So there are 5, 6, 7 companies which are already more than 1 lakh crore worth. Even BSE has become more than 1 lakh. So this is a new segment. Capital market is coming up. Take notice of it. It's an asset light, fast growing business. We'll talk about it a little more. Then you have see, like real estate has come back with 1.6%, which was negligent earlier. Autos, they have come back at about 7.5%. My sense is here again, as the discretionary spend builds up, you are going to see a lot more action in auto. I think this chart is very illustrative. What happens, what is the benefit of seeing the data earlier? 3 years back, there was 0 PSUs which were in the wealth creating list. 0 amount of wealth was created, and we wrote at that point of time, probably turning point is coming. And the stocks were very cheap. Now, 25 companies and 25% of total wealth created in last 5 years has come from PSUs. I am not a big admirer of PSUs, and that's why probably I have missed it completely, but this has created. And still, if you look at the PAT CAGR of last 5 years, PSUs are 34% and private sector is 26%. The P multiple of PSUs even today is only 10, whereas the private sector is about 30. So still there's a lot of steam left in the years ahead. Valuations have become, over a period of time, they have become very flattened in the sense that earlier it used to be, if you buy very cheap, it used to do very well. But it is no more so. It's all about across the board. If you bought expensive, you bought reasonable, more or less everywhere the realization is about 35 to 40%. Only if you are able to anticipate the PEG less than 1 or turnaround company, then you have been able to make it about 40-45%. This one, wealth destruction. There is no wealth destruction. Again, this is a zero number, like PSU. In last study, we found that there are some very small of wealth destruction, about 4.5 lakh crores. So 148 lakh crores of wealth creation and 66,000 crores of wealth destruction. It's crazy. I mean, to have literally no wealth means I can't find anybody who would have lost money. If it is not speculated in this market, you can't find anybody, even if he's a useless fellow, he would have made money. So, I think there are, how many companies? I think there are 1 or 2 companies which have lost 66,000 crores in a situation where market cap itself is about 416 lakh crores. So, there is absolutely no loss. So, I mean, this is also very unreal situation. My sense is, despite wealth creation will be much bigger, there will be amount of losses coming on, and you are seeing some of the crazy listing in digital site, and suddenly they list at 70,000 crores, come down to 20,000 crores. So those things will happen. So as the game becomes bigger, there will be losses. This is very unnatural. So we have to be very careful. We should not believe that there cannot be any loss in investing. Now coming to the theme, India, the multi-trillion-dollar opportunity, compounding economy, compounded stocks. So what is the summary of this book? The book has 4 or 5 takeaways. Almost every paragraph is insightful, but we have taken out few paragraphs out of this. The world is getting wealthier by the day. We'll prove it by the data. How much world is becoming wealthier? India is also becoming wealthier. Second, the most important thing is this. There is no limit to how much financial wealth can get created. In fact, in our mind, there was some kind of ceiling, GDP itna hai, to se zyada kitna बढ़ सकता hai. You know, those kind of things were there. Here, this book, if you read properly, it clearly opens your mind that wealth creation in financial markets can be literally infinite. I mean, of course, there will be some kind of a calibration about it, that he has gone about saying almost 5 times of GDP, but GDP itself is accelerated because of the wealth creation. So fundamentally speaking, it can, this virtuous circle of wealth creation, wealth effect, GDP taking it to larger wealth, we'll talk about it. So there can be really, literally you can call it unlimited wealth creation. So you have to imagine that don't worry how big is the company. and how big can it become? Look at it today. NVIDIA is $5 trillion and people are buying left, right and center. Google is $4 trillion and Mr. Buffett has bought it $4 trillion Google. Obviously, he's expecting multiplicity, at least 3-4 times of that. So one is looking at $10-15 trillion single company coming up in next 5-7 years. Financial wealth can expand at a pace that real output can never match. Financial wealth in the economy can grow at significantly higher pace. We'll give you some data. Securitization, which is the capitalization of the companies, has become the most powerful engine of wealth creation in today's world economy. So he was asking, what is the source of wealth creation in US? So he said, America has become rich because of securitization. They took on to the securitization seriously very early, maybe for 19th century, 20th century, and that's why they became very rich. Rapid rise in financial wealth can lift millions of people from poverty faster than income can. In fact, he's saying that at some point of time, in 2050, today financial wealth, at the turn of the century, it was about 153 trillion. By 2020, it is about, by today, it is about 600 trillion already. And by 2050, he's anticipating, he wrote in 2002 that it could be closer to 4,000 to 5,000 trillion of the wealth for the world. So the whole world become very wealthy. That's the theme, the wealthy world. He's talking about, he's visualizing wealthy world. But this is not just a fiction. He wrote in 2000. We have 25 years of performance of the world economy and world wealth creation with all the difficulties. So my sense is he's mathematically not perfect. I mean, obviously, we can't get next year's earnings right. This guy is talking about 50 years of wealth creation. So I think he's directionally absolutely bang on, but 4-5 years behind the schedule. So I think it is very interesting book. It is out of print. Probably you try to get it. Digital copies are available. Read these books, but read it peacefully. The world is getting wealthier by the day. Look at it. In 2005, total market cap of the world was about 41 trillion. Now it is 147 trillion at the rate of 7% dollar for last 20 years. This is the history of the world in terms of global market cap. The world was about, so world was about $1 trillion in terms of market cap, sorry, GDP. GDP was about $1 trillion and market cap to GDP was 0.2. So world GDP was $1 trillion in 1950 and market cap was only 200 million. Just think about it, 200 million. Much smaller than even Bharti today. And then it has started building up and today $117 trillion of GDP and hold your breath, it's about $141 trillion of market cap and climbing. From 0.2, it has gone to 1.3. What is the US experience? This is the leader, he's the dada of everything. So in 1950, US has maybe $200-300 billion of market GDP and 0.3 means 100 billion might be the total market cap. From there to 2.1 and the GDP is 30 trillion now and market cap is 71 trillion and counting. So this is the evolution of financial markets in US. What is India experience? Look at India. In 2005, India was about half time GDP and market cap was about 17 trillion lakhs. So 17 trillion lakhs in rupees. And from there we have become 416 lakh crores in terms of market cap. Now our market cap is about 416 lakh crores and it is about 1.3 times of GDP. My GDP is about 340 lakh crores. So now this is a summary of world, US and India. Look at only 20-year number. 20-year world market cap has grown at about 7%, whereas GDP has grown at 5%. US again 7% and 4%. India, hold your breath, for 20 years, 14% market cap growth. This is in dollar terms. And GDP about 9% in dollar. These are all dollar numbers and removed from Bloomberg. So this 14% is quite crazy. I mean, if it can continue at this pace, I think it'll be seriously a lot of wealth. So market cap growth faster than GDP growth across geographies, across the time horizon. All the 3 geographies and all the point of time, 20 year, 15 year, 10 year, 5 years. Every time it is higher. So this has led India to from 7th position in 2007 to 4th position in 2024. Now clearly Japan is just about $1 trillion ahead. One good market and we could be kind of reaching them. Even Japan is doing well. But look at China. US of course is untouchable, way out. But China is just about 10 trillion. If we play our cards well, we could be as wealthy financially as them very quickly. They might be at about 11, 12 right now. This is 24 number. They have done well, about maybe 12, 13 trillion. So, but then there's a good chance to become as wealthy as China if we put our policies in place. And most probably this is going to happen in next 10 to 15 years. Impact of wealth creation, that is wealth effect. Now, so much of wealth is being created. What is the wealth effect? Consumers spend more as the value of their assets, such as stocks and real estate, rises. Increased spending occurs because people feel more financially secure and confident even if their income has not changed that much. And wealth effect defies precise measurement, but people are very stingy or very slow to sell their assets and spend. But still in US the experience is anywhere between 2 to 6% of the wealth created. If they have created $10 million, they will sell about $500,000 or something as their expenditure. So that has been the expenditure. In India, I think the story, so this is how it works. Stock market wealth creation increases, wealth effect, and then wealth effect leads to the expansion of real economy, and then you have the corporate earning. Because there is an expenditure in the real economy, corporate earning goes up, corporate earning takes to the, again, wealth effect. So it's a circle which continues, becomes bigger and bigger. So wealth effect in India, what's happening? Currently, wealth in India is highly concentrated at the top. Only maybe less than 5% of people have serious market cap benefits. So the first signs of wealth effect is visible in premium homes, luxury cars, lavish weddings, and these kind of things. You know, very, very high-end discretionaries are completely out of, the demands are very, very strong. Retail participation in equities and mutual fund just about started 5 years back in a very serious way. Expect full impact of wealth creation, wealth effect in a broader economy. It will gather momentum, but I think it will take few more years before it becomes much more broad-based. So the illustration how it works is that market cap in 2025 is say 416 trillion and 24 is 389 trillion. And the change is about 27 trillion. 5% of that is somebody spends. That's about 1.35 lakh crores. And on 331 lakh crore GDP, it's about 0.4% of GDP is the additional. You might be seeing the RBI economists, they are all getting wrong. The first quarter GDP growth was 7.8% when they said 6.5. The second quarter, again, they got it wrong. The economists, they said 6.7 and it came to 8.2. Probably not all, but some portion of that is being explained by wealth effect, which current economists are not willing to acknowledge that much. So what is the India story from NTD to MTD? So this is the story which we wrote in 2008 about the India, the next $1 trillion opportunity. 17 years, it took a little longer, but yes, it happened. It went from 1 to 4. And several potholes on the way. I mean, like, look at global financial crisis. The moment we started the study, there was a global financial crisis. Then policy paralysis. The government became, UPI 2 became completely dormant. Then demonetization. Then teething troubles of GST, IBC, RERA. And then finally the COVID was the last. So we had a lot of problems. It's not that the problems are not going to come. Name of the problems will be different, but problems will come. So the above caused a delay in US 4 trillion by a few years, but it did happen. So this is how it happened. So last 17 years, your Nifty EPS grew by 8% and market cap went up by about 10%. So it is a very slow build-up of about 10% in last 17 years. Now, when we move from here, from 4 to 16, in next 17 years, now we are not economists, we don't have any Any way to say it will be faster or slower? We are saying 17 years it took last time, let it take 17 years more in the next, from 25 to 42. But the delta is not 3 trillion. This time, in the same 17 years, almost on the same population, the delta is $12 trillion. So it is going to have a very different impact in the economy. And that is the core of the study, NTD to MTD. So this is how the saving tsunami. So in last, India in last 17 years, they saved about 13, 14 trillion. In next 17 years, we'll save about 45 to 50 trillion dollars. So there will be tsunami of savings in next 17 years, and that we can see already in the marketplace. Because from that pool of savings only, extra money is coming towards the stock market. And where the India's market cap could be headed. I mean, is headed is wrong, but it could be headed. So in last 17 years, the market cap has grown at the rate of 13%. From 52 lakh crores, we are sitting on 416 lakh crores. In next 17 years, if you go at the same pace, we could be sitting on 3,000 to, I mean, it's very scary to say these numbers, but this is the maths. At the same pace, it could be 3,000 crores of market cap, and still counting from there. So I think we are into kind of a really exciting journey as it happens from. And what happened last time? It turned out to be 2-3%, 2-3 years later. This time, same thing can happen. It could be 2-3 years earlier also. If you don't have so many potholes, you may be a little earlier. And if you have a deeper potholes, maybe 1 year or 2 later. Instead of 42, it could be 45. But my sense is journey is on big time. We got to be tightening our belt and get ready to travel in this futuristic journey. So bottom line, exponential multi-trillion dollar opportunity for most sectors, especially financials, including capital market and consumer discretionaries. Need to identify suitable stocks to play the NTD area. So learn from the sectors and stock. So now we'll talk about how to look at this. So identifying compounders. So we said, what is the compounder? I mean, we said to figure out what is going to happen in future, let's look at what happened in the past. So what was our experience of building up companies, sectors and companies between 2008 to 2025. So what are the compounders? What is the definition of multi-baggers over a period of time? And I think there are a lot of practitioners here, Sanjay Bhattacharya, Ramesh Damani, Sunil, they are the guys who really pick compounders in their life. So we'll quiz them in terms of how to pick them. But that's the real fun of coming to the market. You buy something for $100 and then it becomes 1 lakh, 2 lakh rupees in 3, 4, 5, 10 years time. Shares in high quality companies that can be held for an extended period, allowing capital gains to generate further returns by practicing buy and hold. And so that's the compounding. We have looked at the companies which have given more than 15% return over the long period of 17 years. So just for this little busy, we have started the base year of 2008 with 500 companies, and we have looked at companies which have given more than 15% return in last 17 years, and we have come across 35 companies. These are the compounders. I mean, there can be, from a small cap, mid cap, you can find some more, but it's just illustrative 35 companies. And which are the companies? I mean, I was fortunate to participate in 2 of them, Bajaj Finance and Eicher Motors. Bajaj Finance has given 39% compounded. Now 39% looks not that great, but 39% for 17 years. Can anybody count how many times it is? 269 times. You bought for a lakh rupees and it is worth 2 crores 70 lakhs and it's still counting. So this is the kind of power of compounding, and the smallest is 3M at about 16%, which is about 12, 13 times. So I think a lot of excitement is there. It is much easier to look back and figure out this all happened. But like me, I participated in Bajaj Finance, but in 4-5 years time, I sold out. I bought it about 5,000-6,000 crores market cap and sold out at maybe a lakh crore or something, which is now 6 lakh crores. So that's the way. Eicher, I bought it about I think 10, 15,000 crores kind of market cap, sold at about 80, 85,000. So how do you find multi-baggers or compounders? So what are the characteristics of these compounders? Compounders are few. You're not going to get, like out of 500 companies, you can't get some 200, 250 companies as compounders. So compounders are few. They are rare animals. First, they're just about 7%, 35 companies. Of these 35, 25 are from sectors with tailwind. These companies, they grew much faster than GDP growth rate. Their sales grew much faster than GDP growth rate. 21, 60% are from consumer-facing businesses, all B2C businesses. And 27 companies were market leaders in the base year of 2008. They were the companies which were leading in their own sectors. So, because for a long haul, you must buy only leaders. 28 enjoyed 15, they were inherently profitable also in 2008. And 19 had P multiple lower than Nifty P, which is about 17, 18. And so 19 had a low P, and even other balanced companies, they had multiples which were far more reasonable. So how do we identify the winners for the multi-trillion-dollar era? Trend in per capita. So let's look at two things. Trend in per capita GDP and sector grouping because of that. So our per capita GDP in this period will go from 2,500, 2,600 to more like 10,000 if everything goes, works as per the expectation. And what happened in China? In China, in 2007 to 11, they grew their GDP at about 21%. Something crazy happened. But during this period, their per capita went from 2,700 to 5,000. So that's the period which is there immediately in India. Now, what really happened there? Cars, they were selling 5 million cars. It went to 10 million cars. And it grew at about 21%. Home refrigerators from 44 to 87 million. Air conditioner from 80 million to 140 million. Home washing machine from 40 to 67. So these kind of explosions are going to happen. In various sectors, motorcycles went flat because people started buying cars. So, but the basic necessities like salt, refined sugar, they start stagnating or they start degrowing or growing at about 1 or 2%. So this is what happened in China. So we have looked at discretionary build-up, and here we have put three categories: autos, capex, consumer-facing, and financials. Then, if you read the detailed report, I mean, I can go on, but in the detailed report, we have talked about financials, which is going to be very, very exciting, because in financials, particularly the capital market, what is happening is capital market is one business. Even if you don't spend anything, then also you end up paying out of your AMC fees, wealth management fees. You don't have to spend. It automatically you have to. So this is a very different kind of a business where you this is a cumulative business where your assets, your subscriptions flow, and then it gets accumulated, and the asset management companies, they start making money out of the accumulated asset, and that too on top of on the mark to market also. So that's why worldwide, largest AUM companies are like 50% of US GDP, 12, 13, 14 trillion dollars under single belt in BlackRock and Vanguard and things like that. So financials are going to be very, very interesting in the era of tsunami of savings. Then insurance, two-wheelers, passenger vehicles, realty, healthcare, food tech, and quick commerce. So we have given a lot of slides in the report. It will take a lot of time for me to go through this, but better take a copy and read all of them. Suggested stock picking. So again, we have used the QGRP framework, which we wrote in 2013 about quality growth, longevity at reasonable price. And so the whole theme is market leaders at defendable valuations. That's the thought process as on today. And this is just a suggestive thing, how to think about picking stocks. We were avoiding, for regulatory reasons, to talk about stocks, but we said let's put best foot forward and put some names so that people can understand how to think about it. So we started with the 500 top market cap company again in 2025, and finally we have built a portfolio of about 30. And this is how it looks. And the moment we wrote this name, Indigo, and then all these troubles happened. So be careful, you know. But still we are not removing. So clearly, I mean, these things are for very long term. They are leaders. They will come back. The whole nation is dependent on them. So a lot of these companies are there. Look at them. A lot of them are popular. But actually, this doesn't stop you from buying companies which are large and unpopular, and also buying companies which are small and growth oriented. That's where you are going to make tons of money. These are the very popular companies. Most likely, some of them will do very well. But the real opportunity outside this thing will be large and popular and small growth companies. And we have talked about sector. Here we are talking about financials, banking and insurance about 20%, capital market another 20%. So we are giving 40% weight here. Auto about 13%, capital goods 10%, healthcare, insurance, realty, airlines, cables, consumers, e-commerce and telecom. That's how we have put 100% allocation sector-wise. So to conclude, I have come to end to the presentation. Concept of wealth has changed from physical assets to paper assets. Get that in mind very clearly. The world is getting wealthier. इस सब channels में आगे लोग इतना मंदी करते हैं, दिमाग खराब करते हैं सबका. I didn't say your channel. So just the rhythm of wealth creation and rhythm of value creation are different. So there will always be fight. There will be value creation is very, very compounded, long term, and price movements are absolutely on a daily basis. So you have to be very, very careful. The world is becoming wealthier and India is becoming wealthier faster. There is no absolute upper limit. ये ध्यान रखना बहुत जरूरी है. There is no absolute upper limit to financial wealth, albeit with potholes on the way. Potholes will come. Please don't take it as given that, yes, we are going to go from here to there. There will be challenges and they will come with different definitions. Last time it was GFC, COVID. This time it will be something else, maybe geopolitics. Already there are so many of troubles. So, but it will come back from there because the machine of securitization, the financial wealth is extremely strong. India's GDP quadrupled to US 4 trillion in the last 17 years. In the next 17, it can quadruple again to USD 16 trillion. In the multi-trillion dollar opportunity, financials, including capital markets and consumer discretionary, will see explosive expansion as they hit the tipping point one by one. In India, everything we consume, the penetration rates are 10%, 12%, 15%. So all of them, they will start getting what you call consumed. You see today's Nestle interview, the MD is also talking about, they're also become aggressive in India. And the MTD era will see many compounding stocks. And so I think the stock market game will be very, very powerful, very interesting. And inclusion of retail, which is happening for last 5 years, that's one added force to the, in last 17 years, it was not there except for last 3-4 years. But in next 17, it will be in full force. So I have no doubts that in next 17 is going to be far more exciting. It could happen a little earlier, but let's not be more optimistic than whatever has happened. We'll have a very, very interesting journey with a lot of compounding companies. Thank you very much.
Thank you, Ramdeji. That was a really insightful. It was a really insightful presentation. I mean, whenever you present your wealth creation studies, it really opens up our imagination. And I still can't get over that statement, which he spoke about a week back. And I hope I get it right. And I'm sure I'm going to get it wrong. He said the potential for wealth creation is infinite. The only hurdle is human doubt or human imagination. So I think that's a very, very powerful statement which comes from this study. We have some time before the panel. So we have, the privilege of having Ramdev ji to address your Q&A. So if you put up your hands, we can quickly reach a mic to you. I'm sure, the study has been very thought-provoking. Yeah, we have one hand up there. And Ramdev ji will need a mic. Rohini.
Hello. You can hear me? Yeah. Sir, it was very interesting and very forward looking. I just wanted to know कि